This is a video chart presentation on NutriCorp. It's a bulletin board listed company trading our ticker NTRR. See, the stock's made a real nice move in 2014, coming from lows around 28 cents to rise more than 250% to hit highs of $1. A consolidation from those highs, and now back on the rise, including a real nice day on Tuesday, up 22.6%. Volume has certainly increased this month. 651,000 shares traded on Tuesday. There's plenty of liquidity in this stock as it pushed again to over 83 cents. A strong long-term look to the MACD, nice uptrend, holding over top of zero, showing that the trend is remaining bullish. Climb to the ADX with the positive DI following, indicating a strong upward direction. See, the 7 MFI pulled way away from the 14 and 21. That's something we always talk about, looking for a rebound in the 7 when you see that extreme separation. And sure enough, bounced off those lows, broke right back up through the 14 and 21. All three components holding over top of 50, saying that the price per share is higher than average periods. Nice climb over the last few months in the accumulation distribution as well, showing ongoing buying pressure in the stock. That's reinforced by the Chaikin money flow, essentially holding in the green across that stretch. That's a sign that over 20 period increments, buying pressure is outweighing selling pressure. The CCI just now breaking back above 100. That's a technical buy signal for that indicator. Full still pulled back during the consolidation, showing some momentum came out of the play, but now again rotating and challenging that 50 mark, indicating that bullish momentum is coming back into the chart. And the tricks, holding over top of zero, like the MACD, indicates the trend is bullish. RSIs, again, this is something that we reference in videos. We look for the red and gold lines, the 14 and 21 RSIs, to hold over top of 50, even on any retrace, to show that the bulls are holding control of momentum. And that's exactly what just happened as the stock pulled back from the $1 highs. As far as support and resistance, it's a nice little rounded look. I'd look for a support right at that 53 cent mark. That was the base of the retrace. You can see how that ties in with static support and resistance throughout the latter part of 2013. So I suspect that's going to continue to be a strong level of support on any other pullback. I think it's important to note the stock price is over top of the 50 and 200-day moving averages. That's key in any chart maintaining a bullish look. I think that there's also some support that comes in right here around 63 cents. That was serving as some resistance, but the stock price on Tuesday pushed through that. You can see historically how that was an area of resistance, even going back into May and June of 2013, a little bit of a support point and a little bit of a resistance spot. So in an ideal situation, it would actually hold that level on any pullback to continue to make higher highs coming off of these lows at the end of December. As well, that keeps the stock price over top of the 200-day moving average. Now, from a resistance standpoint, I think that $1 mark is going to be key. That's always an area of psychological resistance, and you can see that premise is held true, with stock only briefly moving above it and then pulling back in August, and again hitting its head on it just a couple weeks ago. And even from a broader view, you see that area serving as support early on in 2013. Beyond that, though, I don't see much more resistance in the way. There'll be some at those highs of $1.28, and then again I'd look up near $1.85, which is obviously a huge move from Tuesday's closing price of 83.5 cents. So that's a pretty nice upside if this $1 mark can be broken, as the chart looks to develop an uptrend, something along those lines, moving off of this base. So those are the type of things that I'll be looking for in the NTRR chart, but as always, merely my interpretation. Thank you for watching. Trade smart.